The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the November 12th wonderful Wednesday of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And, of course, I believe we should always be a pioneer of our future versus a prisoner of our past. And, of course, the easiest way to do that is to remember that in life, everything happens for us, not to us. Just a small little shift there can make all the difference in the world, folks. This is Wonderful Wednesday. Of course, this is TFNN. I'm Steve Rhodes, and welcome to the show. I'm here to serve you. That means that all you had to do is pick up that phone at 877-927-6648. Internationally, our number is 727-445-1044. And I would be happy to work with you, take a look at, any stock chart, commodity chart, whatever it is you're looking at, and be able to assist you. In the markets right now, we got Dow futures. They're off 70 points, trading out at 17,498. S&P futures down 7.5, trading at 2,029. NASDAQ off 13, 4170. Russell down 8 points. As I said on October 31st, we're going to be in a sideways, choppy, maybe a market that pulls back, a market that's going to give a little bit to the bulls, a little bit to the bears. It's going to frustrate most out there. That is really what's going on as we speak here today. King dollar off about 9 pennies right now. She's trading out at 87.62. A really flat market out here. We'll take a look at the currency pairs, though. Hard currency pairs, gold is flat. She's trading at 11.63. Silver's down 10 cents, trading at 15.57. Again, continuing to show that it is weaker than gold out there. Light sweet crude off 75 cents, trading out at 77.19. A quick peek across the globe out here. We're going to find that over in Germany, they're throwing a party. It's a pity party, though. It's a pity because it's off 137 points, down about 1.5% out here. We'll take a look at the DAX. She's trading out at 92.32. The FTSE down 25 points. That's down about 0.4%. She's trading out at 66.01. In Asia last night, green arrows across the board. The Nikkei, though, well off of its session high out here. It closed at 17,197. I think it might have even formed a little bit of a little shooting star candle. Of course, we've seen a couple shooting stars here recently inside of the Nikkei. That doesn't seem to hold things back. The Hang Seng, that was up about 0.5%, up 129 points. She closed out at 23,938. Leading the charge to the upside here this morning on a buyout is the Susquehanna Hat Company. Actually, it's Susquehanna Bank Corp out there. But for those of you, I think it was Abbott and Costello did a routine on the Susquehanna Hat Company. So that's where that came from those of you that want to reminisce. What's some great scenes, with Abbott and Costello out there. In any event, Canadian Solar, that's also to the upside here this morning. You've got American Eagle Outfitters, that's up. Alibaba is to the upside. YY Inc. to the downside. BB&T to the downside. ISIS Pharmaceuticals. I would bet that I wish they didn't have that name out there at the present time. BHP Billiton trading to the downside as well. Okay, let's start off by taking a look at what's going on inside of the futures markets out here. Let's start with the Dow, off 67 points as we speak right now. If we take a look at what the Dow is doing, come on. And where is it that the Dow can pull back to? Well, the first level to be watching that I would say is probably 17,417. This is Dow futures that we're looking at, 17,282. If you start to break below those levels, then you're going to take a look at a little bit deeper retracement. Now, remember, because of the move up here to the upside, even if the Dow were to manufacture nothing more than a dead cat bounce, it's going to feel like a lot of pain. It's going to be a lot of give back out there. I don't know if that's going to occur. It could. It absolutely could. We got to watch these different levels out here. 17,417, 17,282. You break below 17,282, then 16,903 is on your plate out here. You're trading at 17,500. 500. Hey, everybody's going to be saying it's over. The move is over. I want you to know that just the opposite is true. The move is really just beginning phase 2 of that move to the upside out here. So the question is going to be, where is this market going to pull back to? Now, you know, if you were listening yesterday, we got all the signals out here that the market wants to make this retracement, that the move higher, the energy expended to the upside. It's going to be like you running a race out there. And the Dow, the markets have been running a race, a really nice race out there. And this is a race. What do you call those races? Not tag team races. But gosh, shoot, like, come on. What's the? You guys know the word that I'm looking for. Okay. Well, anyways, this is just phase 1, really, of the race, and phase 1 is pretty good out there. But nonetheless, because of that move higher, we could easily see a move down, pull back to 16.903. Hey, 16.469 would be the absolute relay race. Thank you, Tim, in Massachusetts. It's a relay race, and so this is simply just phase 1 of that relay race as we go up into the highs, into the end of the year, maybe even into next October. Oktoberfest. We'll see out there. And anyway, that's what's going on inside of the Dow. If we take a Dow future, if we take a look at the S&P, we're going to see similar kind of patterns out here with regard to where price could move back to. At this stage, not a big deal as far as movement in the S&P. Of course, today could actually, if we did see a close right around here at 2029, you'd actually see a reversal signal. You'd see a bearish engulfing candle that will have formed out here. We'll see how the 2019 level holds out. At 2019, you've got the 8-day exponential moving average. You also have the market profile high out here. So 2019 should be good support. You start to crack 2019, make sure that your tights. Make sure your tights are in place. How about make sure your stops are in place, and you might want to make them a bit tighter out there. Perhaps. And, just take a look at what the average true range is on whatever it is that you are trading out here. A close below 2019, then 2005 becomes the magic number, and then you've got 1966, your point of control using that TAS market profile. Let's take a look at retracements. Let's see where the dead cat bounce, the 0.382 retracement comes in. She comes in right around 1952.67. Now that would be a beautiful thing out there. If we can see the S&P pull back into the 1952 level, again, that's your dead cat bounce. You've got your TAS market profile support level. That would be a nice move. That would be a nice targeted area for a buy, and it's not out of the question for that to take place out here. We just need to get a little bit of a momentum shift, and we've been looking at the indicators out there. Patterns, really, more so than indicators. And it's the patterns associated with the indicators that we take a look at that have indicated to us. Yeah, you got to stop using that word indicated, huh? That have suggested to us, as I even said to a few callers yesterday, no, not just yet. I know that, and the cool thing is, hey, really been consistent here since October 31st, where I switched to this is going to be a sideways and a frustrating market for many out there, especially in trading the indices out here. Let's take a look at the NASDAQ. The NASDAQ yesterday trying to move a bit higher. If we take a look at the NQ, really not. So, this thing here, which has been the lead dog, was the lead dog in the hunt. What the NASDAQ wants to eventually do is get up to 43.93, then 45.85. But it needs to take a breather out here. It needs to take a breather, not because I want it to, because it's just simply going to. It's going to do that just simply because of, number one, because it's lost its steam, it's lost its energy. So the second guy in the relay is not standing on the line. He's sitting there, taking a 5-hour energy drink or something like that. That relay race, we ought to see now the NASDAQ, the NQ, so the strong one, has actually been giving us perhaps the biggest signal, just as the Qs have, that the market is ready for some kind of retracement here. So 41.42, I would expect that to be a level that gets tested inside of the NASDAQ, the point of control. We can see at this stage of the game inside the NQ, it's really the bears, or the sellers, I should say, not so much the bears. Bears are going to get just chopped up. They need to just stay in their cave. Now, trade, on the other hand, that's a whole different story. But to get all bearish out here, not going to happen. Now, if we take a look at where the NQ could move back to, if it breaks through that 41.42 level, well, you're looking at 4,026. Let's go take a look at what our retracement levels are from the low of October 16 to the high of yesterday. 39.94 becomes that first area. 39.94, you've got your dead cat bounce. I would suspect that really from the Qs is where we get our signals as to what the market is going to do. It's going to recharge its batteries. I don't think that if we take a look at the top 10 holdings inside the QQQ, I don't recall them looking too shabby, but maybe we'll try to do that if somebody reminds me out there. as I just may forget. If we take a look at the, so that's the NQ. If we take a look at the Russell 2000, remember, if you're watching us on Tiger TV, my chart here is delayed inside of the Russell by about 10 minutes, but we're really right in the range of where the Russell is trading. Of course, if the Russell could break out above that 1178 area, 1179 is what we looked at yesterday, which it was unable to do, then it would go ahead and make a run for the consolidation highs. That'd take you back to the July 1st level, right around the 1205-ish range. I think that's the consolidation high, is it not? Yeah, right around the 1205-ish range. But likely what it's going to do is pull back to 1155 first, maybe even lower. Now, it's going to be interesting here. It's actually kind of difficult to figure out which of these indices will lead the charge on the way down. You know, ordinarily somebody might say, hey, look, it would be the Russell 2000 would be the train that you'd want to jump on first. I don't know if that's the case out here. I just don't know. What I do know is that the expected retracement and pullback that we should be looking at through through next week Friday, next week Thursday, next week Friday-ish as a target, that we've gotten the first indication that should be underway. Now, maybe we see a little chop on the way down, a little bit on the way up, and back on the way down out there, but the market doing what it should be doing, which is frustrating the heck out of you by just simply moving sideways out there. So just simply be careful. Make sure you use stops, no matter which side of the trade that you are on. If we take a look at, you had nice movement yesterday inside of the mining equities. Most of the mining equities finishing up, even though we had gold, for the most part, finish somewhat flat out here. If we take a look at Goldilocks right now, up 50 cents, trading out at 1163 out here. What do we know about gold? Well, number one, what I believe we know about gold is she is in the process of forming a bottom. Not just a bottom, but a significant bottom out here. Right now, what does gold have to do to really prove that to us? Well, ideally, you'd see it close above the trading session from November the 7th out here. That little key reversal session. That would go a long way. That would actually also set up a small A to B equals C to E to the upside. Would also get above that TAS market profile high on the daily basis out here. Of course, just getting above that as we take a look at gold, that has not indicated to us, that has not confirmed that we've seen the ultimate changes of trend, because we've seen gold do that, meaning get above that resistance level back here in October. That turned to be a false breakout up here. It got above that level on October the 13th. It lasted all the way into October 23rd, and then went ahead and made that next move to the downside. So gold is not out of the woods. The only way for Goldilocks to get out of the woods and or silver is really going to be with that euro. And if we take a look, and I go back, we take a look at the euro futures. I don't think I did this. If I did, my apology. But she, too, has, of course, we like to call the euro the queen, because the U.S. dollar index is the king out there, the king of beers, the king of currency. Of course, it's nothing more than a basket. It's really not a currency, is it? It's just a basket of currencies out there. When we take a look at the U.S. dollar index out here, the euro not giving us really any significant indication here that it has that's ready to move higher. It has moved lower with less relative weakness out here, but shoot, it can't even clear the trading session from November 6th out here. Come on, Mrs. Euro. This is Steve Rhodes. This is TFNN, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 77, and you got to love the internet. I got a couple of emails from folks saying that they were able to Google the Susquehanna Hat Company and the Abbott and Costello. I guess there's a on YouTube. There's a little. They got the snippet. You know, they're usually 5-10 minute routines out there. So if you've never seen it, or if you have seen it and you haven't seen it forever, that would be like me. I'll probably watch it after the show's out there. It's been so long. Go ahead and Google it. Susquehanna Hat Company. I guess that's what you would Google. I think that would probably come up. Let's go take a look at some of these stocks here that are moving in the pre-markets. You got Fossil Group, FOSL, is the ticker symbol. That's the leader in the clubhouse to the upside. Closed out at 103. It's trading out at 112 and change right now. Out with the numbers. Their third quarter profit topped their estimates. They generated, looks like their net sales were up about 9%, 8.5% or so. Let's go see 112.72. Where's that going to take price into? 112.72 out here. You've got a line of resistance, so it's going to go ahead and close a window. That would be, or potentially close a window. That was generated by a gap down here with volume on May 14th. So if it can close today above 111.20, and the pre-market is trading above that right now. If it can trade, if it can close above that, that would be positive. Then that 111.20 area ought to become a support level. Old resistance should become support. Now it hasn't been tested. You like to see resistance or support levels tested. good 3 times would be helpful out there. But that's where it's going. That's a supply line, certainly, that it is trading into. So we'll see if it can take that on. I think that it should be able to. Now, I think I can. The reason why I say that is it had pretty good volume here yesterday. Good volume, 2.9 million shares. Didn't exactly have any wide price spread or what have you, but somebody was taking some kind of action inside of Fossil Group. Key level's going to be about 4.9 million shares. If it can get above that 111.12, stay above that 111.12 level, then if we start to take a look at, well, you can take a look at the downtrend first. Let's go see. Whoops, didn't mean to do that. Let me actually go take a look at our trend tool out here, just our line tool. Let's take that off of the, come on, what do we want to use here? Let's use the red line out here. Let's take it from the high, and this is just a trend, not a channel line, for the high from November 6th. So we can see, this thing has really broken its trend, for sure. So it's broken its trend, no problem out there. So then what are we looking at as far as where this could travel to if it gets above 111.20 out there? Now, it's going to be doing that in the market that could be a down market today. So that would also be another thing to keep an eye on out here. Your dead cat bounce, well, it's already above that 108.13. So 118.38 should be its final destination. Not final, but it's a final destination in its little bounce. And it may be more than a bounce. We'll see what the volume is like. And that is on Fossil Group, FOSL. We won't take a look at Susquehanna Bank shares just simply because it's a buyout, but we can take a look at American Eagle Outfitters. That's trading to the upside here this morning. Closed at 12.51. Trading out right now at 13.65. Looks like they've raised their guidance for the third quarter out here. Let's go see what 13.65 does for this equity. This has got some trouble. This has got, of course, this does have, off of the lows out here, this does have a sign of strength. And so if we take a look at American Eagle Outfitters, price came back into that sign of strength almost to the T. The T would have been 12.21 because that's the low of August 20th out there. That's when we saw that wide price spread accelerated volume. Total volume of 31 million shares. So that's the way that you like to see something come off of the bottom. Then you want to see price come back and come back into a level of support. That is what it has done. Now what I say, it's trading out. Let's go see if it's going to take on that B point. No, 13.67, not yet, but it could be taking that on. So it's come back with lighter volume. The B point, the swing is September 29th out here. That high, 15.11. If a price can get above 15.11, do with more than 8 million shares, then you've got an A to B equals CD to the upside. That would confirm inside American Eagle Outfitters. But it has come off of the lows with some conviction. We'll see if there's any additional conviction in it today. Is there a second sign of strength off the bottom? Because this has got plenty of signs of weaknesses on the way down out here. But it looks like she has turned a corner. Now, let's take a look at something that has not turned the corner, or it's turned the corner to the downside. That's going to be Mellonx Technologies, MLNX. Closed at $44, trading at about 41 right now. Let's go see what it's going to visit at the $41 level. Ticker symbol MLNX again at 41 bucks is going to be dealing with a most recent swing point as well as an area where it broke out. So this just had a... This is interesting. So this equity here, let me just do this here real quickly. Let me just remove a couple of things. We'll move those. So clean that chart up. So if we take a look at this equity, this has pulled back. It's going to test out a breakout area. That breakout area is priced out at about 39.77. That had volume there of about 4.3 million shares. That ought to hold. We probably have to look at further back on the left-hand side of the chart. Maybe we'll do that when we get back from this next break. This is Steve Rhodes at TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 75 points. Trade out at 17,540. S&P down 7. Trade at 2,032. NASDAQ Composite off 13. She's trading at 46.47. Russell off 4 points. Trade at 11.75. The DAX off 154. The FTSE down 30 points. Gold up $2 and change. Silver now only off about 4 pennies. You got Fossil Group leading the charge up about $10. Susquehanna Bank shares up $3. The ADT Corporation, the security service company, up about 5%, up $1.68. Danaher Corp up about $1.50 right now. Alibaba up $1. Caesars Entertainment up $1, up 10% this morning. They must be out with numbers. To the downside, Altisource Portfolio Solutions, not a good solution, off 14% this morning, down $10. Smuckers is painting the town red with, looks like strawberry jelly, off about 3.5%, down $4. Melnix Technologies, we took a look at that before we went went into the last breakout here. Now, Melanex, as I take a look at this, is confirmed another A to B equals CD to the upside. So coming off of its lows out here back on June 3rd, 2014, confirmed an A to B equals CD structure once the B point was taken out on June 23rd. That had about 522,000 shares. That was taken on July 16th with 2.7 million shares. Makes a little bit more than a 1 to 1.272 A to B equals CD. Travels sideways. Goes ahead, makes a little bit higher high. That was on October the 1st. That actually completed the 1 to 1.618 A to B equals CD. Then what does price do? Price pulls back right into that sign of strength from July 25th out. Let me just go ahead and expand this out just a bit, make it a little bit easier for you to see. So July 25th, that low, 39.71. Volume there, 4.5 million shares. Comes back and tests it with what? 971,000 shares. That's is now set up, even though this thing is gap lower today, got volume of 454. So long as that C point holds, so long as volume doesn't exceed 4.5 million shares, and you got 457 right now, it could. So we'll just have to see. But that looks like that low will be tested again. That's how I would be taking a look at Melanex, MLNX, meaning the 39.71. Now, if it can test 39.71, again, do it on light volume here. You've just got you've still got the larger A to B equals CD pattern that is in play out here. That B point now being the October 1st level, 834,000 shares, and that was passed with 1.9. So you just have a complex A to B equals CD. Looks to me like Melanex wants to make a run for 51.23. We'll know for sure when we see how price handles that level of 39.71, assuming that it in fact gets down there. That was ticker symbol again, MLNX. Let's go take a look at a couple of these other stocks that are moving out here. Let's take a look at Altasource Portfolio, ASPS. I don't see, it says they discontinued lender-placed insurance. Let's take a look and see what this equity here is doing. This thing has been moving down with some accelerated volume over the past several weeks since August. Really had some big volume to the downside, 1.6 million shares for this, and then it followed that up with a little curtain call on October 21st with 2.3 million shares to the downside. It's taking out looks like it's trying to take out a swing point from October 23rd. Only 924,000 shares there. You've done 314. Let's pull this back further, see what this thing might be running into. Buzzsaw, what it's running into. Let's go take a look at a weekly chart out here. Not looking good. Not looking good. Sorry, that was just a quick water pause out here. So this is now, this week, it's trying to take out the March 25th, 2013. It's a weekly chart we're looking at. 66.97, only 1.1 million shares. You've done 1.3 already this week. Any close below 66.97? And you're at 63.77 right now. That is not a good scene. Then you just got to take a look at the A to B equals CD on the weekly chart. Let's go take a look at that. So your A point in this equity is going to be the highs out here, December 2nd, the weekend of December 2nd, 2013. Your B point is going to be this low on February 24th. Your C point is going to be the week of March 31st. 1-to-1 says this ought to move down to about 52.34. You're trading at 64 right now. I closed that. B point had a weekly 2.9 million shares. You got through it with 3.2. Yeah, so you've got to confirm, at least confirmed 1-to-1. I'd have to say more likely this is going to head to about the 32.08 area. That is Altasource Portfolio. Let's look at Smuckers. Let's go see what JM Smuckers is doing out here. I'm looking for their numbers. I don't have the numbers totally posted. It's a weekly chart we've got on our screen. In the weekly chart, we can see this high volume bar down here from February 2014. Not unusual, right? It looks like perhaps that's where it may be headed to. Now, in the weekly chart, it may have some support out here. It looks like over the course of the last month, it's formed a new market profile low. 97.16 would be that number. Let's look at the daily, get a feel for what Smuckers is doing on its daily chart out here. So gapping down this morning, it looks like it's already 10. No, it has not. It has not tested the swing from October 15th, October 16th. October 16th is really where it's testing. So if it can hold that high of 98.55. There was 1 million shares there. It's done 188. We've only been trading for 10 minutes. Not necessarily that good of a thing out here. It looks to me like Smuckers ought to go down and really test that low from October 15th, anywhere from the 95.60 to 97.90 area. Let me pull this back out here. Man, take a look at Smuckers. Smuckers formed an island bottom reversal. Doesn't get too much better than that. That's how bullish those reversals are. Remember, we were looking the other day at, I think it was side reel or something like that. No, Seadrill. Side reel. I don't know where the heck that came from. Yeah, I do. It came from the ephemeris. But if we take a look at, it was Seadrill that had woken up and looked like it was going to form an island bottom reversal. It did not. However, in the case of Smuckers, back on the trading session of February 14, 2014, it did. What's an island bottom reversal? That's an excellent question. That's when the prior session, or sessions, in this case here, session from February 13th, the low out there was 93.21. The high then of the next session out here was 92.24, so you got a little bit of a gap. Then on the very next session, meaning February the 18th, it gaps up the low 92.61. We have a little bit of a gap in between both of those. That sets up your island top. What does price do? Well, in this case here, you would have thought it would have been able to have made it all the way back up to its most recent swing point high, which would have gotten you into Smuckers down back to the October 29th level. Remember, we're always using our Fibonacci retracement ruler to help us guide us in where price is going to head to. And if we take a look at that, well, what price did in the guiding, in the guidance area was it did what it was supposed to, right? Gets up to the point 618 area, does that on May 29th, but it was gapping up with decent volume there, 1 million shares. That was saying what? Saying I'm not done moving higher. Actually went ahead and formed. There are, when we take a look at reversal candles out here, there's only one real candle that is truly a continuation pattern. I'm going to be teaching that in my upcoming 7-week trading, coaching, mentoring program that is going to be kicking off. Our first session is going to be Saturday, November the 9th. Entry into that 7-week course. So what we're going to do is we're going to do a Saturday course for 3 hours between 9 and 12. Then I'm going to follow back up with each of you for 6 solid weeks. And we're going to reconvene, get back together on January 9th. That's going to be during live trading hours. We're going to be utilizing all of the patterns, all the secrets. I'm going to teach you the absolute best patterns out there for your trading, and these are the best patterns that work on any time frame. If you are a day trader, this is a must. If you are a long-term trader, this is a must. The market is always communicating to us. The problem is, if you go take a look at books, and books are a great way to learn out there. It doesn't matter what level you're at. It's a great place to start. The problem with books is you'll find out that most books leave out exactly what it is that you're supposed to do. That's where I will step in, and I will teach you exactly what you need to do, what you should be looking at. This is really a personalized. We haven't done this before. I've not done this before. So it's really going to be a personalized 7-week program out there, because it's more than just simply giving one course, bang, 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 you're done out there. That is not what we're going to be doing here. This is going to be a hand-holding. This is going to be, you've got questions, I've got answers, and we'll do it together. And I want you to be able to fish. So I'm going to teach folks how to fish out here. And I would have taught you that with regard to the continuation candle out here, this is called the Rising 3. It was a perfect version of that continuation candle inside of Smuckers. So what does that mean? That means you look to the next level for where Smuckers ought to have gone up to. What would that level be? Your 0.786 retracement. That's at 107.36. What does Smuckers actually do? Well, on the trading session of June 20, it gets up to 107.26. How do you like that? Within a dime. Of course, it finally did get up to that level, the 107.36 range, then started to back off. And that's where we're at inside of Smuckers. At this stage here, they are buying the jam out here. So it's off of its session lows. So it looks like the folks that came in on October 16th, whatever funds, whoever might have been buying out here, they're saying, hey, butter up. Give me some jam out there. Shuffle up and deal, huh? How many of you watched any of the Texas Hold'em tournament out there? $10 million was what the final pot was that they were playing for out there. Now, the cool thing is only $10,000 entry fee. The entry fee, and that used to be 25 grand. I believe it was 25 grand, was it not? In any event, congratulations. I don't recall the name of the guy that won that tournament out there, but how would you like that? One hand. I think it was $10 million, and was it not? Is it just coincidence? Is there coincidence? Did he not have a pair of tens? I don't recall. happened to wake up early in the morning, turned on the television just to see what was going on, and see if they were still playing, and they were just presenting him with the bracelet. So I think I might have saw the winning hand somewhere, but maybe somebody in the Tigers Den knows out there if it really was. I think he might have he had a pair of 10s in his hands, and then he flopped a set out there when it came up with a 10 on the board out there, and that pretty much did the deal out there. So was it a pair of 10s? Then it was $10 million. You got to love how life works out here. In any event, let's go take a look at Stratasys out here. SSYS, that is off about 3.5% this morning, down $3.58 out here. I think Stratasys has a high volume high. That's the Smuckers. We don't want to, come on, system work for me. If I click on Stratasys, give me Stratasys out here. Okay, we take a look at SSYS. Yeah, it's got this, well, it's been tested. Yeah, it did have a high volume high. Maybe if we go back a little bit further, I'm referring to the July 1st high out here. That's at the 128.59. That had volume of 6.7 million shares, and she was tested with 2.2, 1.4, and then you got the evening star reversal formation. And that was on September the 19th. How about that? Now what we're looking at is a potential of an A to B equals CD to the downside out here. Of course, this is now trading into its most recent sign of strength out here. So let's take a look at Stratasys, get a feel for where this is headed to. So 99.68. You close below 99.68 today. That would be filling that gap, that would be closing that window, that would repairing that window, which means that level of support would no longer be. What we can also take a look at, so we want to watch the 99.68 area. If that holds today, then that becomes this where gaps become your friend. Remember, when we say gaps get filled, what we're really saying is that the price comes back to breakout areas. That's all that a gap is. Now, a gap is a little bit stronger than that because you got two sides of it in which to be able to identify a couple levels of support or resistance, depending on whether it's a gap up or a gap down. Now, in this case here was a gap up, a sign of strength. Sign of strength here had volume of 8.2 million shares. The problem is that price was moving back with 6.7 million shares on November 5th. That's not how you like to see price come back into a breakout area, gap or not. So now the key is going to be 99.68. Of course, what you know is that the real key is going to be the candle session from a couple of days. And in this case here, which is the day prior, 95.38. That really becomes the level of support. So we'll see what kind of volume Stratasys has in it today. 197,000 shares so far. Remember, the benchmark that we're looking at is 8.2 million shares. If, in fact, it closes under 99.68, then you've got a swing point, an A to B equals CD to contend with as a pattern. And that's the swing point from October 13th. That low is 104.86 out there. That was volume of 1 million shares. When price crossed through that area, did it with 2.2 million shares. So we got two competing patterns out here. That A to B equals CD to the downside. Oh, come on, get rid of that. Get rid of that. There we go. That A to B equals CD to the downside. We're going to start from the high on September 18th. We're going to start at, this is going to be our A point. Our B point is going to be down here on October the 13th. And C point was the retracement into November 3rd, about a 0.786 retracement. 1-to-1 is where you're trading at right now. That is at 99.03. The actual inter-session low so far has been 98.84. If, in fact, it picks up volume, then it's got the 1 to 1.272 A to B equals CD. So our next guided area is going to be about 91.97. What do we have sitting and resting at 91.97 out of curiosity? You've got a high volume-ish low that was from May the 9th, and that's at 85.30 to 89.92. So I would have to say that's likely where price would head if it's unable to hold 99.68. That's ticker symbol SSYS, Stratasys up there. Let's see what else we got. So we're off of the lows. Dow's down about 58 points out, 56 points. As I say, this market's going to have something for the bulls, something for the bears, and it could be each and every day until next Friday out there. And then we start to crack and break to the upside. Let's take a look at a couple things here moving to the upside. I guess we're going to have to wait until we get back from this breakout here. Dow's off 52, S&P down 5. We'll be right back.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 51 points. The S&P down 5. Composite off 9. So let's try to set up the day out here to be able to look at things that are going to give us clues as to whether or not we're going to see some cracks in the ice, some chinks in the armor off of the lows out there from October the 15th out here. So the first place that I'm going to start that we're going to look at is we're going to look at the Euro-Japanese yen. So we know this currency pair here, this tracks the U.S. stock market better than any other currency pair out there. So this is the one you always want to come to get a feel for what's going on. Now, If we take a look at it, it's actually formed a Gartley buy pattern. Strong. This currency pair has been very strong. The last move up coming off of the November 10th level. So over the course of the last couple of days, been a nice strong move up. Of course, what HM teaches us is that if you've missed out on a strong move to the upside or the downside, you want to buy that A to B equals CD pattern. You want to learn how to buy and sell that D point. I'll be covering all of those secrets, the secrets of those patterns. It's like a magician, you go watch them do these tricks, and at least I've always been enamored with how did they do that. And then you find out it was just a small little trick that actually was amazing. A small little trick. You want to do a small little trick? I sent this video to my son. My son likes magic out there, and for his daughters, I kind of asked him if he ever did it. Take a bowl of this. This is the trick out here. If you get grandkids, kids would have you. Maybe just want to do a trick yourself. Take a bowl of water, and then pour in a bunch of pepper. So you got all these little pepper flakes out there. And then what you do is have a little kid, stick their finger in there. And, of course, the pepper does nothing. But what you want to do is you want to go ahead and make sure that that finger's got some dish soap on it. And if you go ahead and you put that your finger in with the little dish soap, obviously it's transparent, nobody sees it. What you'll see is the way that the pepper will react in the waters. It'll be like you're parting the Red Sea out there. Of course, it's a Black Sea if you're using a black pepper. I don't know if you can use any other pepper than the black pepper. I guess you can. But in any event, the little trick. So a little trick like that, okay, because you're looking and you're like, how did they do that? Because you could put in one finger and nothing would happen, and then the other side you can make it go. You do voila, magic. Well, inside the markets, when we take a look at the indicators, tools, things of that sort, it's one thing to use the tools and indicators, but there are little tricks that actually are just like that, those little tricks, and that's what I'll be doing on Saturday morning. That is on November the 22nd. So get it over to the homepage of TFNN.com. Sign up for the workshop. $395 is the special price. If you're a subscriber to Mastering Probability, you can get in for $295 out there. 7 weeks of hand-holding. It goes beyond that as well. Now, if we take a look at the A to B equals CD down pattern inside of the euro, this is a 30-minute chart, by the way, that we're looking at. The A point's going to be out here on the trading session of about 1,700 hours. So what is that, 5:30? That was yesterday. Our B point on this, we're going to take a look at. That's right down here. That came in at about 21 to 21:30 hours, and our C point is going to be right up here at 2,300 at about 11:30 last night. We can see that it has completed the 1-to-1 A to B equals CD. Got a little bit of a reversal signal out here. We've only seen the move sideways. It's still trading with inside this session here that took place between 4:30 and 5. If this level here fails, that means that we should see the Euro-Japanese yen continue its movement lower, and then we should see the markets do the same. If, in fact, this level here holds and you see the euro get above, the exact price you're watching for is 143.76. 143.76 sets up the next maybe retracement to the upside, and then we ought to see price kind of alleviate itself. That's one of the areas to be watching inside of the market. I guess my soap story took us to the break. I'll tell you the other things that you need to be looking at as well in the second hour of the Trader's Edge. Folks, it is wonderful Wednesday. Thanks so much for joining us. Have a great day. I look forward to seeing you real soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.